Hi folks, I'm Phil Newton, developer of Trading Strategies, which provides real-time training and education. This video shows some highlights from my live training sessions.
Hi folks, welcome back. So we're looking at euro dollar, and what we're looking at with this video series is essentially simple price action reading. All too often people make reading the charts far too complicated than it needs to be. Just keep it simple, keep it loose. Don't worry about trying to label anything in particular, label a specific pattern. I stopped doing this years ago and it's made it so much easier to try and interpret what's going on with the charts. So you'll notice a few horizontal boxes from the simple price action reading part 1 and 2. That's how this is identified. We can see we've got the main thrust moves down here. We've got a previous thrust move just up here where the cursor is. Let me just highlight it. So we've got this previous thrust move up here. That's identified this zone here, which is where this move down stopped. It obviously started up here. I've just got this yellow line to highlight area there. So we've got this zone here, which is pretty much where price is stopping at the low end of this last move, down. It's a little bit rough around the edges, but it's not a significant change in the balance of power, but it is a fairly reasonable move in fairness. We've also got, we've got these previous move down here, so we've got two zones, one there, just a little bit of a pause, and also this one over here. And we've got this previous one here. So that's how I highlighted these zones on the chart. Basically where the balance of power has shifted dramatically, I've marked off the end and the start of those moves, and that provides me with zones of expectation of where the next move, the next something could happen, whether that's a continuation or a reversal, only time will tell. So keeping it loose, just keeping price action loose. What do we do with these zones? If we've got some zones, what do we do with them? Well, let's just keep it nice and loose. Price started on the left hand side of the chart, moved up, trend is up. We've got a retracement down here. So what have we got? Trend is up, bit of a retracement move. So what we can say is that should price go through that consolidation zone there where price is just stalling, so should price go through that level, there would be no reason not to expect or assume that price would change and go up to this previous change in the balance of power. Again, looking back across the chart, around about the 130-200 location. No reason not to think that whatsoever. Should price go down, again, on the lower time frames we could mark this off, but we can see the same, thrust move up here, significant change in the balance of power. Should price go down in the short term, could quite possibly see 12700 to the downside. So in the short term, if the short term trend continues to the downside, then it'd be fair to assume that we could see a move down to around 12700 in the short term. And all it is just where did the balance of power shift? The shift in the balance of power. So what we have is price, in the big scheme of things, trending up. So if the trend continues and goes through the 129.30, then we could expect price to get potentially up to around 13200. That's where the next something would happen. In the short term, if the short term trend continues that we can see down, price would be reacting off the 28-2900 location, this previous balance of power zone or change in the balance of power here. Where could it go to? Well, in the short term, this previous balance of power zone here. Nothing more complicated than that. Let's dial the chart out a little bit. Our picture's changed quite dramatically now. So taking an even larger view into account, we can now think about another scenario. So we've got a big picture scenario. The price started at the top, it finished at the bottom. The trend is down. There's no trend lines, there's no moving averages, there's no other indication on the chart other than price started at the top, it finished at the bottom, the trend is down, and this what we considered the dominant trend on the area of the chart that we were previously looking at was the dominant trend. Well, now looking at more information, that view has changed. The overall trend is down in the big scheme of things, and in the short term the trend is up. So we've got this previous change in the balance of power there. We've already identified the 129.30 that should price go through that level, no reason not to assume that we'd see price get up to the 132, 13300 location. So if the dominant trend we're saying this time is now down and price goes through that previous change in the balance of power where price acted as support, so if price goes through around 125.50, no reason not to assume that we could see price get down to around 123, 122, potentially if price continues to go down to the 120, 1900 location. So very simply, trying to just factor in with the areas of interest, the locations where the next something could happen. If price goes through 129 and this short-term retracement uptrend continues, quite possibly around 13200 would be an expectation of the next something to happen. Maybe a pause, maybe even price to continue. If the dominant trend, if this larger dominant trend, downward trend resumes, if price goes through about the 12500s, we'd be looking at around 122 potentially as a target zone. That's where the next something could happen. So tying this in with a very simple interpretation, again just keeping it loose, keeping it simple. Tying the areas of interest, the next something locations where the balance of power has previously changed, using them as target locations, and just trying to say, well, if the short-term trend upward continues, then I've got a reasonable potential for 2 to 3 cent movement. If price goes down through 25.50 and the dominant longer-term trend continues, quite easily I could be looking at around about the 120, 122, 121, 100 location, around about 4 cents. So we've now got a plan of action, a location of interest. If price goes above 29.30, longs, 3 cent movement expectations. If price goes below 25.50, again similar, around about 3 to 4, maybe even potentially, should price go through that next zone, maybe even the 5 cents movement to the downside. It really just depends on which way the trend, will it be the shorter term trend continue, or will it be the longer dominant trend that continues to the downside. So basically you can identify easy trigger levels and easy target locations with this same balance of power, just using a simple interpretation of chart analysis.